Friday morning, 7:30 in the morning, 7:39. First 1 hour and 9 pennies of the tape. That means 9 minutes, 1 hour and 9 minutes of price action on the opening bell. We can clearly see the breakout of an ascending SMF market maker breakout, and how those breakouts have strength, and how those reversals that come down have reversals at certain price action lines, and you go up 1, 2, almost 3 teenies at $1.19 per teeny, and you're back above 75 here, and this is printing 0.21 ratio equaling $4.03 at 3.4 teenies. That's the reversal. This was the initial breakout. This was the 1 teeny, 2 teenies, 3 teenies, 4 teeny, 5 teeny reversal. So your reversal, if you take 5 teenies times $1.19 today, that's what that reversal was. And that's why these put options over here, the 530s, had a good trading range. And when this breaks higher, MMTs, then the prices come back down lower here. So as this goes higher, you can see how this side loses the value here. But you can see the call value over here, right here. This is the call value. Okay, that's a 520 call. They expired today, and that's okay. But look at the market. The high was 840, but look at the market. When we were putting the lows in down here, and when you had that breakout, these contracts were $2. And right now, that 520 call is printing at 630 by 660. 630 is printed here, right here. The 630 is printed. Look, right here. Somebody just printed a 50. That's the 520 call. This over here is the 530 put. When we go back to the Google chart, it'll come very clear that as we break higher here, the value contracts over here in the 530 put. It already made its move. When it stopped going down, it was time to cash in this side of the market at the peak. And then the call side over here is going higher in the 520. Once again, you can see the bid and the ask. You can see the low. That's a $4 and some odd move. If you wanted to sell at 670, if you're making a market down here, that's what we do. Look at that. 1, 2, almost 3 teeny reversal. Right here, right now, back at 85 over here. 0.28 and rising to 0.39 in the breakout SMF reversal. Back up to the half bar. And it's live. It's here. It's now. And if it doesn't get north of 95, 97 and start going toward 100, you're not going to, that's what will take out this half bar. And you would break back up here. So let's see what happens. That teeny resistance, it's that closing half bar right here. So you can see this side of the market putting in a bottom. You can see this side of the market. On the call side, you can see that spread, 50 by 30 here, 60 by 30 now. And when you understand that another reversal is getting weak, you look at what side of the market. This side here is making a bid. This side here is dropping in value. Okay, the 530 put is holding its bottom because you can't take out the teeny line resistance, and you're below 85. So, as we go through the processes of understanding the directional movement, trading a weekly options expiration, right now, here we are live. We have that breakout. We can see that SMF diamond, higher diamond breakout. We can see that at 100. We're making ratio highs here in that breakout. And look at the call contracts race up in value from $2 to $11.10. Look at that. 520 call. And Google's printing at 529.48. The low was 513. The high was 530. Right here. We know that. And knowing how the breakout happens here gives you a vehicle of making a market between the bid and the ask, the SMF bid and ask ratio between buyers and sellers. Learning how to sell into it, though, but learning how to control the bid and ask. And when you top out, and you did, you would have to go to 100 to break out. Look at here. All right, nice. When that diamond breakout was happening, you were taking out those highs, and you shot up another 1, 2 teenies to the high. And you have to stay elevated here. You hit a 0.53 ratio. That equals 9.96 ratio. Well, dollar movement ratio, but just 9.96 from the teeny expansion. Look at this expansion. Look at the pullback. Remember that we've only been open an hour and 20 pennies. 20 minutes. An hour and 20 minutes. And trading, both instruments have trades. The 510 calls are making all-time highs at $20. And the 520 calls from $2 to 11.10 is contracting right now, because as this contracts, you got a double diamond reversal, but this half bar is going to be the key again, just like it pulled down 5 teenies here, but then broke teeny highs right here, and you could see the sharp reversal here. It's live right now. It's pulsing right here. What's the half bar? Let's take a look here. See how the calls, they peaked it at 520 at 11.10 when you were at that high right here. Now they're 8.50 by 9.10. You see that? Almost $3 off the high. $2 from the ask to the high. They're 8.60, 8.70, 9.40. Look at the double diamond reversal, but look at how we broke that last teeny high. So when we got the pullback, we broke teeny highs, and we would be looking for that in here. The higher that we stay elevated here, during this time element between the buyer and the seller, this is going to gauge that buyer and that seller here. Okay, that double diamond reversal is where you would start selling half. And if you start to close below this half bar, that's where your secondary stop market order is. The longer that you can consolidate above 95, the stronger that the upper end of this beginning reversal will be at your current price action. But you have to get this above 95, and this has to start ticking up toward 0.53. Call 910 by 970, 20 by 10, 30. Look at that bid and ask. That's on that call. You're getting support here, but you're not above 95. This here, got to break that ratio high to keep these going higher in price. And they certainly can. They peaked at 11.10, like I said, and there were almost $3 on the pullback to the ask. So it's it's contracted now. You can see it right here. 9 by 960, 40 pennies wide, based on what this trend is doing. Okay, well, now explain what happened to everybody. He made
I made $50 in 20 seconds.
That's right, but how? Well, no, it's not about the money. It's about how you have to take a single contract and then learn how to work the bid and the ask ratio. And understanding how to use, look at here, look at the put. It's getting value. It's $1 up with this reversal here and now. See that 369? Look at that. That's a 1 teeny. And remember, we had that double diamond reversal up here. We talked about that, didn't we, everyone? Didn't we?
Mm-hmm. Yes.
Now you got a triple diamond reversal. Look at the diamonds falling in value. What does that mean? That means that this is breaking out on the put side of the 530. What does it mean, Chuck? Tell me.
It means that I'm cooking, going both ways at the same time.
Oh my goodness. You're on an assignment, which is a small cap, bear, and bull. How's that working for you?
Well, I'm starting to get a pretty good handle of it. Right now, I'm up 49, 50 pennies on both sides, just going away.
That equals a dollar.
Yep.
100.00 ratio equals $1 times one. There'll be days where you'll do that several times a day, and 1,000 shares for a dollar on 50 cents on both sides of the market. Hey, that means that you're working the market correctly.
Right.
Between who?
Coming out. Me and the buyer. Me and the. Wait a minute. I'm in the middle of a transaction here.
Okay.
Be back.
All right. Here we are, folks. We are putting a reversal back down. You can see the bid and ask here. This is the one that we just came out of. We bought it and made a market. And this is how a weekly options expiration, 826, that's a $530 put. So when you hit the bottom of 4.00 ratio, that was that double diamond reversal, that price. And it made a move, and making a market is learning to identify the low end there and transact, but selling back to the public over here. Between the 60 pennies wide, we would throw a limit order out. We just did a live trade with it on learning how to get this side of the market and then getting the public to buy from you on this side. So wholesale puts you out with a profit all the time. Volume management is the amount of contracts is usually 10. So when you're taking a 60-cent spread, there's $600 trades. Okay? But you learn how to do it with just doing it with one contract until you're comfortable with it. It's not a hard thing to do. We've been doing it all day. And the thing about it is, both directions of the market, the 520 call has a value that it loses when you get that double diamond reversal to that teeny line. And then this side of the market, if this is going to hold support, this side here, if it doesn't break a teeny reversal, then this side will continue to go lower. You can see the bid and ask. And this side is going to have a fairly decent base between the buyer and the seller, because when we break lower, this is going to get value and this is going to lose value. So learning how to be a seller and a buyer on what side of the market? Well, this side of the market worked wonderful, went right up to 1110. That's over with. Now look at it here and look at this side. This side is putting a bottom in at $4. You got a $2 ratio bump. Right now, look, 4 to 610 by 660 on the double diamond intraday reversal price action. From the original last breakout to the reversal high of that double diamond reversal. And then you're continuing to come right back here, and you're going to be below these half bars. And what are they? Let's take a look. This half bar right here is 525.35. And you're at 525 here by 525.42, 42 cent spread. That's between the public market makers and the public here. This is the SMF bid and ask trim ratio. You made a 0.53 high, reversal to 0.31. This is what your high was, and look at how much money has come off of that high print in that reversal. And at the same time, take a look at how the value shot to 1110 and it's now at 660, 680 God. On that reversal. Take a look at this side, build in a market. Look at this side of the market work, the 530 put. So the thing about it is, if this thing goes below 75, well, these are going to go higher and these are going to go down. So you have to have, it's easy to see both of these right here relative to what the application says. And right now, we're holding that 0.30, and we don't, there you go. So you gotta go back toward 0.53. Look at the values. Look at the spreads and look at the spreads between the two markets relative to where the price action trend is here and now. Below 75, you're below that teeny line. You have reversed. Let's take a look at this half bar again. I've got 5 here. 525.35. That's this triple diamond down. That's your half bar, MMTs. I'm going to conclude it. We will continue to trade this all day. $2 yield. Nice trade here. If this thing goes up, then you have to start scaling out here and learn how to use the ask and how to cut that seller out, put your bids out there, contract it, and get someone to pay you for it. That's how you do it. As you tick up, this goes down in value, and this is holding that value of that lower market at 680 on the contracts based on that teeny bounce. 530 put, 520 call, both expire today, relative to breakouts and pullbacks and breakouts and reversals. Populate different sides of the market here and different sides of the market here. The high of the contract, 1110 on the 520, $2 low, $9 move on options expiration. This one over here, it closed at 11. This was the original 530 put going into the trading day. $11 was the close. They ran it up to $16 and then dropped it down to 4. And right now we're putting in a teeny support right here, and they're losing their value, and these here are going up in value. You can see the prints. See? 750s, 780s, all the way down here. Last prints on the 520 call is 790. Okay, so when you broke out 1 teeny, 2 teenies higher, this side of the market went higher in value, and look at what happened to this side of the market, the 530 put. It lost all its value when you broke 1 teeny up, 2 teenies at $1.19 per line, market maker SMF market maker line, and you are in a reversal from that low diamond, and you hit that diamond teeny reversal, and you took out all of these previous half bars, and you're going right up to this next teeny line, and you're at 88 here. These are going right back up in their value, and these are coming right back down on their lows again. And what happens is people don't know how to make markets in these. So that's why we're doing it. 88, you must get back to 96 here in order to go up and break that high. Now, it did it over here. It broke it. Then it pulled back to it, and then broke it, this one right here in that last cycle. Double diamond, and you had 3. Look at all the diamonds down. So you got a teeny pop right up here, but if you don't go north of 95, you're going to just come down and break the half bar. There it is, 840 by 930. These are coming back down and challenging their lows. You got teeny resistance. I will see MMTs in the live trading room.